Welcome back to another video with the House Money Investing channel. In today's video, we're going to go over some price movements, a couple gains I had today in the market, as well as some nice stock picks I got for you guys today. If you like this type of content, please hit the like button for me. I'd really appreciate it. Subscribe, hit that bell if you want to follow my journey. I do have 12 brokerages that I display on this channel. And, the House Money Challenge is something I started back in June, which is basically me deploying capital into the market, withdrawing that capital out of the market, and just having stocks that ride on the house's money. Thus far, since June, I've collected over $12,500 of free shares, which are pretty much risk-free investments for the long term. I do analyze stocks 7 days a week, so you guys will be receiving nice stocks picks from me every day. I currently have a portfolio value right over $41,000 in this channel, as well as well over 1,200 stocks that I am currently playing positions into. Now, in the link below, you can get 4 free stocks from Webull, valued up to $3,700. You can get a free stock from moomoo, Robinhood as well, and then you can get a $30 from the M1 account. And all these promotions here, these shares or the money, you can liquidate right away, withdraw it, and put it in your bank account if you like. Or they're nice stocks like Google or Coca-Cola or something like that, and you can hold them for the long term on house's money. So let's jump right into the video. By the way, all the price movements that I show are stocks that I own. So we got Under Armour. It was up 5.8% today. Then we got Fastly up 5.7%. Then this here is my Stash app account. It's up $522.06, up 8.23%. Then I got 2 high-yield dividend stocks to buy now. The first one we're going to look at is ticker GILD. This is GOOG Sciences. Maybe that's how you pronounce it. This thing here hasn't done very well as of late. Well, as of late it has, but over the long term it hasn't. And it's just starting to get its wind beneath its sails as times have really changed since the pandemic. So let's take a little bit more of a dive into this company. It does pay a nice dividend, over 4%. The PE ratio is kind of crazy right now because it is trading super high. The expense ratio is high, which is going to basically show you that it's going to have some nice growth in it. I looked at 30 different analyst ratings, strong buy and hold for this company. Out of 100%, only 7% of those guys said to sell it. The rest of them said to either buy it or hold it. Basically, they're guidelines that aim to improve diagnostics and treatment rates, and provide tailwinds for growth in HIV. Their pipeline could begin to see more blockbuster launches, particularly if one of their medicines they have is able to see solid data expanding its approval indication. GLID markets several single tablet regimens for HIV and its next generation products with better long-term safety profiles. And this is basically going to boost the market shares for this play if they are successful with that HIV play. Their EPS has been all over the place. Has been up, down, up, down, up. Fourth quarter doesn't look so good. I expect quarter 1 of 2021 to be very nice. They had a very good quarter 3 of 2020. This is basically like a biopharmaceutical company which engages in the research, development, and commercialization of medicines in areas of unmet medical need. The firm primarily focuses on areas that include human immune deficiency viruses, acquired immune deficiency syndrome, liver diseases, inflammation, and respiratory diseases. They have a vast variety of different products already on the market, and they're just with the way healthcare is set up right now, these pharmaceuticals, the way they're booming because of the pandemic. I mean, I'm very bullish on this company at the moment, so it's going to be something I'm going to get into. Next here, we're going to have another high-yield dividend stock, which is ticker TD. This is TD Bank. This is actually a position that I already hold long-term. I am currently up 20.79% in my position, while I'm also receiving that 3 to 4% dividend yield. It's actually a 3.93% yield, so you're going to get a 3% to 4% return on your money. This thing here usually grows, about, I would say 12% a year. So me being up 20% is really, really well. The EPS for this company had a great quarter four of 2020. Quarter three was kind of lacking, but they did have a strong quarter one and quarter two. They missed on quarter three. They got it back in quarter four. So we'll see how quarter one plays out. And this is a banking financial company. As most people do know, banking and financials are on a bounce back for 2021 due to, the world opening up. Interest rates are going to go back up. People are going to have to pay on their loans. So the bank will be collecting, the loans and stuff like that. This is a Toronto domain bank, which engages in, providing financial products and services. It operates, through Canadian retail, U.S. retail, and wholesale banking. In Canada, it offers various financial products and services, as well as telephone, internet, and mobile banking services. In the U.S., it provides retail and commercial banking services, as well as wealth management services. The wholesale banking segment provides capital markets, investing banking, corporate banking products, and investment needs to companies, governments, and institutions in the financial market. This is another bank that survived the stress test last year. And, I just see a lot of these banks like Bank of America, of course, JP Morgan Chase, Citibank, even Wells Fargo. I see these banks making a nice comeback. So it'd be nice to collect that dividend. If you're not in this play, take a look into it, look at their financials and, their balance sheets and everything like that. And, take a deeper dive into it and consider getting into at least expose yourself to the financial sector, because you're going to want to ride that wave of, these banks when they make this nice comeback. Plus, you're going to want that nice dividend payout. Next here I got for you guys is 5 Robinhood valued stocks that will make you richer in 2021. First one, we got the behemoth of Facebook. Facebook is a company that I hold long term in several different portfolios. I also have Facebook playing on house money in the house money portfolio. In the house money portfolio, I have multiple different positions and multiple different brokerages as well. Some of them are down, some of them are up very nice. Facebook is basically just an amazing, great growth stock. I looked at 49 different analysts, 86% buy rating. And, basically with more users and usage time than other social media networks, Facebook provides the largest audience and the most valuable data for social networking, online advertising. Facebook ad revenue per user is growing, demonstrating the value that advertisers see in working with the firm. The application of AI technology to Facebook's various offerings, along with the launch of the VR products, will increase user engagement, driving further growth in advertising revenue. And they make so much money off of advertising. It's just ridiculous. And, Facebook also owns WhatsApp, which is very popular in outside the United States, and it owns Instagram. So definitely, they're just dominating the social media space. Other than that, you pretty much just got Twitter, and some people probably use Snapchat. Facebook, of course, has great earnings. And like I said, this is going to be a software play. And, Facebook operates as a social media networking company worldwide. The company engages in the development of social media applications for people to connect through mobile devices, personal computers, and other services. It enables users to share opinions, ideas, photos, videos, and other activities online. You want to play into Facebook. I believe long-term Facebook is going to be one of the biggest companies. It's already one of the biggest companies, but it's going to grow even much more bigger. And I actually see this company to start paying a dividend, over the course of time as they keep on growing. Next here we got ticker AZN. This is another pharmaceutical play. This company here is a recent IPO back in, late October, early November. It's up over 73% since then. So a great growth pharmaceutical company, great EPS. And this is a clinical stage biopharmaceutical company. So it engages in the development and commercialization of novel treatments for certain types of diseases. It focuses its products on, like a oral small molecule potassium competitive acid blocker. So definitely a great pharmaceutical company, and some of the clinical stages they came out have been very successful thus far. Hence to why they have such a run up, and that's ticker PA. Why would I say PAT? That's AZN. Oh, I gave you guys the wrong company. I'm sorry. I gave you guys PAT. I meant to give you guys AZN. I don't know what I was thinking. That was just another company on my watch list that I didn't have in the video. But okay, so we'll get into AZN. I guess include that as a bonus. Well, so we got AZN, right? This is also a nice growth play. It actually grows about 14% a year, pays a nice dividend of 2.61%. And this is another pharmaceutical company as well. It has great analyst ratings as well. 23 analysts, over 78% say to buy. The company is expanding its oncology presence with several important pipeline products. In particular, the company's EGFR drug holds major blockbuster potential in lung cancer. The management team is focusing the pipeline toward unmet medical need, which should increase the odds of success and bring strong pricing power for new drugs. It has a large presence in emerging markets and should benefit from these markets' faster growing prospects, especially in China. This company has very good EPS as well. And this is a holding company which engages in research, development, and manufacturing of pharmaceutical products. Its pipelines are used for the following therapy areas: metabolism, oncology, respiratory, things of that nature. So definitely take a look into AZN. This was actually my bonus stock because I actually had 4. So ALXN was actually my bonus stock, which is another pharmaceutical company. Over the long term, this one hasn't done great, but up 39% last year due to recent trials and things of that such. So they're like labeling the expansions into generalizing, which is going to give them great volume growth despite potential competition. They will be able to leverage its rare disease expertise and infrastructure to efficiently identify patients and doctors despite the small populations. With orphan drug status and strong efficiency, solid pricing power in the rare disease market without sacrificing reimbursement from payers or market shares. This company has outstanding EPS. And this is like I said, it's a pharmaceutical company which engages in it focuses on serving patients and devastating and ultra rare disorders through the development and commercialization of life transforming therapeutical products. So definitely a nice play here. And next we have Wells Fargo, which I mentioned earlier, ticker WFC. I held this one long term as well. I'm up 26.52% in this position. Wells Fargo hasn't seen very good green days, but of course it's on the bounce back for this year. I mean, it was beaten down over the pandemic about 50%, but it's already ran up 35% in the past 3 months as people are just pumping into this company knowing what's going to happen in the financial market. Wells Fargo also does pay a dividend of 3.74%. You could lose 7% off this play once everything consolidates, but with 3 to 4% yield, you're really only risking 3 to 4% loss. For a potential nice gain of, I would say, about 3%. I mean 13, 10, 11, about 11%. That's the upside to me for 2021, about 11% gain. So you can risk 3 to 4% and gain 11%. Looking at 27 analyst ratings, you got 48% hold, 48% buy. Wells Fargo has a history of prudent underwriting and are probably closer than not to a turn in the credit cycle. Wells Fargo retail branch structure, advisory network, product offerings, and share in small and medium-sized enterprises is difficult to duplicate, ensuring that the company's competitive advantage is maintained. Wells Fargo offers the scale advantage of money center bank without the risk and volatility associated with the expensive capital markets operations. Their EPS has also been all over the place, but they did get it together Q4 2020. We're expecting a nice EPS in 2021. And this is a diversified, community-based financial service company. It engages in the provision of banking, insurance, investments, mortgage, and customer and commercial finances. It operates through a few segments like community banking, wholesale banking, wealth and investment management. The community banking segment offers a complete line of diversified financial products and services for customers and small businesses, including checking and savings, credit and debit cards, and automotive, student and small business lending. The wholesale banking segment provides financial solutions to businesses across the United States and globally. The wealth and investment management segment includes personalized wealth management, investment and retirement products, and services to its clients across the U.S.-based business. The other segment offers to the products of what they call WIM. Customers served through community banking distribution channels. Wells Fargo has been around forever. It's been around for almost 200 years, about 150, 170 years. It's so old. I don't know if you ever seen the pictures of the wagons pulling the Wells Fargo. The horses, the wagons. The horses pulling the Wells Fargo wagons and things of that such. I personally use Wells Fargo on a day-to-day. I have a checking and savings and also another business account with Wells Fargo. It's one of the banks, one of 4 banks that I do operate in. And I've never had an issue with it. I'll hear negative things about it, but hey, I make money on it. Like I said, I'm up a nice percentage, so I'm gonna keep messing with it. Then last we got AT&T. This thing here has just been doing so poorly. It's kind of went up a little bit over the past 3 months, but it still hasn't recovered. It was down 30% during the pandemic. Honestly, I believe this thing's going to run up about 25% or more in 2021 due to 5G and things of that nature. I am currently down in my position 7.48%, but I'm collecting a 7.18% dividend yield, so really I'm not down at all, to be honest with you. I looked at 28 different analyst ratings. It's all over the place. 61% hold, 25% buy, and a 14% sell. Warner Media holds a broad array of content rights and has a strong reputation with content creators. Within the wireless business, AT&T holds the scale needed to remain a strong competitor over the long term. Sprint and T-Mobile face a long road as they attempt to merge despite networks and cultures merging together. AT&T has pulled together assets no other media or telecom company can match. The firm has direct contact with more than 170 million customers across various products, providing an opportunity to build deeper relationships and that drive increased revenue and loyalty. AT&T have actually been beating their expected EPSs, which is great. And this is going to be a telecom play. And basically, AT&T is a holding company which engages in the provision of telecommunications, media, and technology service. It operates through communications, Warner Media, Latin America. The communications segment provides services to business and consumers located in the U.S. or in U.S. territories and businesses globally. The Warner Media segment develops, produces, and distributes feature films, television, gaming, and other content over various physical and digital formats. The Latin American segment provides entertainment and wireless services outside of the United States. And they also do advertising as well. So they do a wide variety of different things. And then they got the 5G coming on top of that. So I personally see a lot of growth in this company next year. Lastly, we have the Stash App account. Went up a little bit more to $524.16, up 8.27%. That'll be it for the video. If you like the video, hit the like button, subscribe, hit that bell. I'm going to go ahead and sell, I believe, 6 or 7 stocks tonight. So I will drop that video for you guys a little bit later on. I appreciate you guys for tuning in. I'll catch you in the next one.